Hey, so at this point, we've covered the rules that covered members must follow within the AICPA Code of Professional Conduct. And remember, this is one of our 3 major auditing professional frameworks that cover the rules for audit professionals themselves. Okay, so now we're going to cover the conceptual framework that the AICPA Code of Professional Conduct has outlined. Okay, so at this point, we've previously discussed the different rules that the covered member must follow, which emphasized the independence rule. Right, we discussed the results that might impair independence. So now what we're talking about is the different threats that would lead to a departure from this entire framework. Okay, so for the exam, you need to remember the 7 major threats to the AICPA Code of Professional Conduct. At a super high level, there are 3 steps to understanding these threats. We must first identify threats, and this is going to be the big one. Right, we must be able to identify any of the 7 threats. Once those 7 threats are identified, we could then evaluate the significance of the threat. If we determine that it is significant enough, then we must apply safeguards to eliminate or reduce the threat. All right, so once we've done that, we could then evaluate the safeguards and make sure that they actually worked. Okay, but the most important takeaway for you is understanding these 7 different threats. Okay, you must be able to read a question and identify what it is that they're specifically referring to. Okay, because you might be asked to identify what threat the question is related to. So let's go through each of these 7 threats and break them out with an example so that you could really see the full picture. Okay, so our 7 major threats consist of the adverse interest threat, the advocacy threat, the familiarity threat, the management participation threat, the self-interest threat, the self-review threat, and the undue influence threat. So firing this up with the adverse interest threat. Anytime you see the word adverse, this is generally not a good thing. Right? Basically, we're saying here that we can have a threat to our compliance because we're essentially in a position where we're working against the client. And that means we have our own motives, which tells the financial statement reader that we're not necessarily going to be objective. And more importantly, the AICPA says this is a no-no. Okay, so an example of this could be a class action lawsuit filed against the client. Right? We're suing the client, so therefore we have an adverse interest. And how can we be objective and independent when we're so upset with the client to the point where we're suing them? Okay, we can't. Whereas the advocacy threat is the exact opposite. We're not working against the client in this situation, we're working on their behalf. Okay, but our objectivity and independence can still be compromised. And the reason is because we're advocating or endorsing the client on their behalf. Okay, so if we're endorsing the client's services or products, that's an advocacy threat, right? So thinking about the word advocacy, let's match that up with the word advocate. Okay, so let that be a memory aid for you. All right, the next one is the familiarity threat. This is similar to what we talked about when we referred to the possible impairment due to family relationships. Right, essentially the AICPA is concerned that we're going to compromise our objectivity and independence because we're too close with the client. All right, so if we're overly familiar with the client, right, maybe they're a close friend or a family member, then the AICPA is going to wonder, how can the covered member be objective without any sort of bias if they're spending all that time with the client? Okay, so an example could be if the member's close friend or immediate family member is employed by the client, right? In that case, we're overly familiar with them. Okay, next up we have the management participation threat. So what did we previously say about management participation when we were talking about possible impairment of independence due to business relationships? Well, what we said is that the covered member could take on business relationships as long as they're not acting in a management or financial decision-making capacity. Okay, so anytime the AICPA sees that the covered member is acting on behalf of the client in a management role, that's going to be problematic. Okay, so something like authorizing transactions would be a no-no. So anytime you're thinking about the management participation threat, you're thinking back on impairment due to business activities. All right, next up we have the self-interest threat. Okay, so when we said that you're thinking about management participation threats, you're thinking about threats due to business activities. Whereas when you're thinking about the self-interest threat, you're thinking of what we referred to when we were talking about threats due to financial relationships. Okay, remember, having a direct financial relationship is going to impair independence regardless of its materiality. So if for whatever reason we have a financial interest in the client or even a contingent fee that is predetermined by the client, we have a threat due to self-interest. Right? So when you're thinking about self-interest, you're thinking about selfishness. Okay, and the AICPA obviously not going to be okay with any sort of selfishness. They're not cool with any bias towards the client. That's the whole name of the game here. The self-review threat is essentially saying that because it is us that did the work, there's a risk that we're just going to say everything is good to go, right? We're good at everything we do, so why review it? All right, so An example of this could be if the covered member is performing bookkeeping services for the client and then subsequently audits the same prepared financial statements. That is a self-review threat, right? They perform the work and therefore they're saying there's no need to review it. And finally, we have the undue influence threat. Here we're saying that we're being threatened by somebody, right? We're being threatened by the client. They're trying to coerce or exercise significant influence on us, right? So for example, this could be our client Max at the head of a cruel world telling Lucy that if you don't listen to me or if you don't do what I tell you, we're going to make sure that you're fired from this engagement. Okay, and ultimately that could potentially lead to a lack of objectivity and independence. Okay, so at the end of the day, this is how we identify the different threats. Once we have made the identification as to whether or not the threat exists, all the AICPA is saying that now we need to put together a game plan, right? We need to put together safeguards to eliminate or reduce these threats to a point where essentially Lucy could do her job.